How much dividend income could an investor produce from a portfolio valued at just around $5,000? Now first, just to state some of the obvious, an investor with just $5,000 will by no means be able to go off and retire off the dividend income, as it's just not simply enough. But still, you'd be surprised on how much dividend income even a relatively smaller portfolio can generate if the dividend investor is willing to get a little bit crafty and step out of the normal quote-unquote investing strategies. Now in this video, I'm going to give some of the interesting methods and some of the interesting strategies a dividend investor could use to stretch out their dividend income even with a relatively smaller portfolio. Now if this interests you at all, make sure to please drop a like down below, subscribe, and let's get right into it. So first off, just to sort of gather a baseline, just to give you an idea of what sort of a normal investor would sort of expect as far as dividends from more of a traditional route. So most investors invest into things like the S&P 500. Right here, the SPY is currently valued at around $450 as of filming this video. And for every share of this ETF, for example, that an investor would buy, they would be earning around $6.50 per year in dividends, or just around $1.58 on a quarterly basis. Now, because the portfolio example that we're talking about in this video is going to be a $5,000 portfolio, for this specific example, an investor that had around $5,000 to play with, they would only be able to buy around 11 shares of S&P 500s. Now, because the SPY ETF pays around $6.51 on a yearly basis or something around there, an investor would only receive around $72 per year in dividend income, or around $6.02 per month. Now, of course, that's just talking about dividend income. That doesn't mean that this investor that buys into the SPY, the S&P 500 ETF trust, wouldn't of course gain some capital appreciation long term, but just for the example of this video, now we all have an idea of what it would look like if an investor bought into the S&P 500. So now to get into some of the fun stuff, we are going to be going over a few higher yielding ETFs that investors could of course buy into to generate a massive amount of dividends on a monthly basis. But along with this, of course, there's going to be some possible risk. But the first ETF, for example, this is actually an ETF that I own throughout my portfolios. It's SVOL, or the Simplified Volatility Premium ETF. Now this ETF shorts the volatility index and has been around for just a few years. And even though the ETF's share price is down around 10% on the max time frame, this ETF pays a massive dividend, around 17% yield, or around 30 to 32 cents on a monthly basis. Now 30 or 32 cents might not seem like all that high, but keep in mind this ETF is only around $22 or $23 per share. So heading back over to the calculator, if an investor with $5,000 wanted to buy all SVOL and earn massive amount of dividends from day one, they'd be able to buy around 217 shares of SVOL with a $5,000 budget. Now SVOL pays around 31 cents per share per month, at least something around there is what SVOL has been paying for a while. That means that in theory, a dividend investor with just around $5,000 invested, and if they put all of it into the Simplified Volatility Premium ETF, they could earn somewhere of around $67 or $68 in dividends, and this is on a monthly basis. Now, like we talked about towards the beginning of the video, $67 is of course not enough to retire off of, but let's say you have relatively low expenses, $67 might be enough to at least cover a bill or two, which is definitely a huge milestone to reach for any dividend investor. Another super high yielding ETF that an investor could in theory buy into if they had a relatively small amount of budget to work with, but still they wanted to generate a massive amount of dividends. Pretty much from day one, an investor could buy into the TSLY, the Yield Max Tesla Option Income Strategy ETF. The TSLY Yield Max Tesla Option Income Strategy ETF is an ETF that does not invest directly into Tesla, but instead by using options in a synthetic cover call strategy. This ETF so-called references Tesla and basically writes cover calls in it without actually writing cover calls in it. Now this ETF has obviously sparked some interest across the board for more income dividend focused investors like myself, because of course it does have a distribution rate of around 58%, which of course is far from normal even when you're talking about higher yielding ETFs. Now this ETF has a massive dividend yield somewhere around 60 to 70%. And looking a little bit deeper into some of the most recent dividends that TSLY has paid, we're looking at anywhere from just under 60 cents on a monthly basis to just a few months back even further when TSLY was paying upwards of 80 cents and even over $1 on a monthly basis. Keep in mind this is for an ETF that's around $10 or $11 per share. But heading back over to the calculator, if an investor had a $5,000 budget and wanted to invest it all in TSLY, with the way that TSLY is trading right now, an investor could buy around 440 shares with just that $5,000 budget. And because TSLY is paying around 58 cents per month in dividends, at least that's what it's paid over the past few months, If an investor bought $5,000 worth of TSLY, they could expect, at least going off of history, around $255 per month in dividend income, which is significantly higher than even the last higher yielding ETF, and of course, monstrous compared to what an investor would earn from dividends by investing in the S&P 500. But wait, there's even one more crazy ETF that's offering even a higher yield than what we saw off of the last two. We're talking about CONY, the YieldMax Coin Option Income Strategy ETF, or ticker symbol CONY. Now, CONY has one of the highest dividend yields I've seen across any stock or any ETF, honestly, ever. The last few dividends that were paid by CONY, $1.08 back in November, and back in October, $1.21. This one also pays out on a monthly basis. Now, because CONY is currently trading at around $23, $24 per share, if we take $5,000, which is what our budget is, and divide it out, we could buy around 209 shares of CONY with that $5,000 budget. And if we were to go off of the last dividend paid by CONY, which was the dividend that was paid last month, $1.08 times 209 shares, an investor that buys into CONY could expect around $227 per month in dividends if the dividends were to continue like they have been, which, keep in mind, they don't need to, they probably won't, but just going off of historical numbers, that's how much we're looking at. So those are three different super high yielding ETFs that in theory could offer an investor a massive amount of dividend income basically from day one. Now, just to state the obvious, just because a dividend stock or ETF is offering a massive yield does not mean that it's necessarily a good investment. You see, there's some dividend stocks or ETFs across the board that do offer massive yields but have actually lost investors money long term because the share price decay has been horrible. And speaking of share price decay, just looking at one of the examples that we talked about in this video, for example, TSLY, even though it offers a massive dividend, or at least it has historically, this ETF has lost around half its value in just around a year. So just because a stock or ETF offers a massive dividend, there should definitely be more metrics or more reasons that you want to buy into the company or the ETF. But for the more income-focused investors out there that want to build out a portfolio that is spitting off a lot of cash flow from day one, some of these higher yielding ETFs definitely are interesting and most definitely worth looking into. For me personally, the way that I sort of play these higher yielding, riskier plays, in my opinion, I always use them as smaller satellite positions, never making them over 1% of my overall portfolio, but I still do enjoy having them within my portfolio just to honestly sort of juice up my overall dividend income on a monthly basis, which I honestly really like a lot. But even with that, the majority of my portfolio still remains mostly focused on names that are going to pay dividends but also grow over time. But now I want to hear from you guys down below, especially if you are building out a more income dividend focused portfolio. What is the number one high yielding stock or ETF that you've been buying as of recently? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.